Well, you're already said you've got 401 games. That's got to make
Apa sih BBB? Ngomong lah dengan BBB.
All right, hi guys. How do you guys do? Can you guys hear me? Hi guys. How do you guys doing? Can you guys hear me? If you can hear me, yeah. All right, guys. All right. Still, all right. Yeah. All right. Hi, Florence. Hi, Bobby. Hi, Gusty. Hi, Faris. Hi, Lucky. Hi, JYY. All right, yes, all right. So I will have to mute all of you. So in case you have any questions, you guys can just type in the comment box. Just type in the chat box before. All right. All right. Okay. So I believe that now is much more better, right? So if you are ready to go, type in ready for me. All right. Type in ready for me so I know that you guys are ready to go. Yes, let's go. Let's go. Yes, I love your energy, very high energy level. And also for your information, our Zoom discussion will be also be streamed on our Facebook account, on our Facebook page as well, so that some people who are not in our group, they can join in for this session. All right, let me adjust my camera so I can look better. All right. All right, I believe now I look better, right? Yes, hi, Gerardo. All right. Okay, so let me share my presentation slides here. All right. So our topic for today will be going to cover about this thing on how can we really scale into trades and maximizing our profits. All right, who like to always maximize your profits? Give me a two. All right, who like to maximize his or her profits in forex trading? Give me a two. So I know that you are excited. Hello? Can you hear me? No sound. Yep. Yeah, before we start, check again my audio. All right. If my audio is good, just let me know. If you couldn't hear me, let me know as well. So I know there's something wrong with my audio. Okay. All right. So Florence, maybe you can just exit this meeting and join in again. Maybe there are some connection with your there are some issue with your connections. All right. So without wasting any time, let us start now. And this Zoom meeting or Zoom discussion will be last about 1 to 1.5 hours. And I hopefully that you guys are watching this on your tablet or on your laptop. And if you have no choice but to watch with your mobile phones, it's okay also because things will be very small. All right. Okay. All right. Yeah, Florence, I believe that there are something wrong with your connection. You might you can try to leave the meeting and join in again. All right, because something might go wrong there because other people is okay to hear me. Okay, so let us proceed to the next slide. All right. So before I start, please do me a favor. We allow 1 minute for this. Take out your phone, open up Instagram and type in FX Action Trader and make sure that you have followed us on Instagram, Facebook, and also YouTube channel. We are going to publish more contents on our social media in order for you guys to know us better and also in order for you guys to get the very new updates from us. Yeah. Sorry guys, I need to check again. Is my audio working fine? Everybody can hear me? Can you guys hear me? Yeah, thank you. All right. All right. Thank you for the feedback. All right. Yes, thank you. You guys are so energetic. All right. So myself, okay, so let me move to the next slide. So yeah, I need to make a very quick disclaimer here. So any advice or any trading tips that I'm going to give later on is just based on my personal opinion and also my personal experience. So please do not take this into account of your personal circumstances and do not trade or invest based solely on this information. And also that in FX Action Trader, we do not believe in getting rich quick program. And what do we believe is there's only one thing, smart work, and you have to commit your time and also your effort in order to gain the skill that you need to generate some profits from the market. All right. Yes, correct. Scam. There are a lot of scam overall. There are a lot of forex scam, a lot of money game scam, a lot of so-called investment scam on the market. So we need to be a very wise and a very intelligent trader and a very clever investor in order to filter out all those scams. And from here, we can improve and bring ourselves to the next level. Okay. So for those of you who are first time here, so my name is Chuan, all right? And I'm the co-founder of FX Action Trader and my partner is Mason. Mason is very active in Facebook. We have a Facebook group that is called the Pure Pride Action Group. I believe that Mason has been showing a lot of good examples on how can you look for a very good trade and how can you reason out your trades and also how can you develop your very own trading plan. All right, and both of us have a combined trading experience of 10 years, and we always think that forex trading should be easy and forex courses should be affordable because something to do with my story, because I have attended a lot of courses and I have paid a lot of those called the fees to those gurus out there, and I found that at the end I'm still stuck at my initial point. And I also think that trading, in order to be sustainable in trading or in order to be consistent in this game, you need a very rules-based approach, and always know that preserving your capital is the first ever lesson to learn before any technical knowledge. And since 2017, we have coached more than 200 students all around the world. I believe that this is the old amount. We have increased to about 400 now. All right. So are you guys ready to go? Are you guys ready to go? Let me know. Type in a yes for me. Yes. I just need some yes from you guys. Yes. Very good. All right. So before we start, yeah, I'm actually looking at the comments on the Zoom chat box. All right. Before we start, I just want to know your level of trading. All right. Who have not traded before? Don't be shy. Who has not traded before? Let me know. So I know that you are new to the industry, or who? No, nobody. All right, meaning that all of you here are already trading. All right, still on demo account. I'm new. All right. So who have traded more than 5 years? 6 years? No? All right. So never mind, just let me proceed. So in this Zoom meeting, you'll be going to learn 3 things. All right. The first thing is that how can you read a naked chart? All right. So this might sound simple, but most of the time, the simplest thing is the most complicated thing to learn. And the second thing that I'm going to show you, how can you identify market structure in a very, very simple way. And the third thing is that how can we scale into trades and maximizing our profits in whichever pair you trade, regardless of the time frame, regardless of the time frame, and regardless of the currency pair. Okay, so the first thing we have to know that we are a price action trader, and being a price action trader, we need to know that what does a candle in the market trying to tell us. So from a candle body, we can see that there are 4 information from the candlestick, which is the open, close, high, and low. And for the bullish candle, the closing price is always higher than the opening price. And for a bearish candle, the closing price will be always lower than the open price. And trading is always about logic. All right. I'm a more technical person instead of being fundamental. All right. So trading is just about logic, because behind the markets, humans are the one trading behind the markets. So what does a long candle body mean to me or to all of you? And what does a short candle body mean? All right. A long candle body from the market is always trying to tell us that there are very strong buying or a very strong selling pressure. And a short candle body meaning that the buying pressure or the selling pressure are weak. So this is to do with the market opening session. So basically for me, I prefer to trade during London and also New York session, because these two sessions have the most trading volume. All right. So about Asia session, it depends on the market and depends on whether the market show me a very nice setup or a very nice signal or not. So there are some important patterns for you to take note. So I will not go into details for this, because I believe this is quite common. You can do your research on your own. So the first pattern is bullish and bearish engulfing candle. So this is some signals for us to go for an entry. The second thing is that the pin bar pattern. So we have the bullish pin bar and the bearish pin bar. So for the bullish pin bar, we can know that the seller is trying to push the market lower, but there are there is still very strong buying pressure over there. So the candle refused to close bearish. And the bearish pin bar is that the buyers are trying to push the market higher, but there are still strong selling pressure in the market, so that the bulls cannot go higher. And the third one will be the morning star and also the evening star pattern. So we can see that there is a strong candle followed by a doji and also a strong candle in the opposite direction. So normally morning star and evening star are being used in trend reversal or price reversal. And the second thing, I think I missed out one. Yeah, doji. So whenever doji happens, this means that both the sellers and the buyers have the equivalent momentum or the equivalent power in the specific market. All right. So how can we scale into a trade? So there are 4 steps for us to do. So the first thing is that we need to always identify the market trend. The second thing is that we need to know where is our key levels. And the third thing is that we need to identify our entry pattern. So these entry patterns can be in the form of candlestick, or can be in the form of chart pattern, or can be in the form of combination of candlestick and chart pattern. Depends how do you structure your trade. And also you can always add in other conferences like EMAs or RSI or other indicators that you like in order for you to have more confidence in taking the entry. But personally, I do not use indicators except for EMAs. All right, and the fourth is risk and money management. All right, so first thing, let us see how can we identify a very nice and a very good market trend. All right, so market, there are three trends in the market. We have the uptrend, downtrend, and sideways. And during an uptrend, what do? We go for a buy trade. And during a downtrend, what do? We go for a sell trade. And during sideways, what do? We do not trade sideways market. All right. For me, I do not like to trade sideways market. All right. Let me jump into the chart. Where is my chart? Okay. So whenever we have chart like this, it's very easy for us to spot the trend. All right, you can always use, I'm using TradingView. You can use your MT4 as well. We just need to know the high and low in the market. All right, so before this, so just now I have mentioned that during an uptrend, what do we have? We need to see that market has created a high level and followed by a new high level, meaning that this price or this previous high level has been broken by a new high level. And when market show us something like this is a valid uptrend. All right. And how about for the sell trend? Because I found that many people are still get caught by the market trend. We always need to wait one thing for confirmation is that market shows us a possible low, and this possible low is broken by a new low. So when market show us this is the only confirmation for a downtrend. All right, because many people they are trying their best to always want to buy at the lowest point or want to sell at the highest point, and they every day what they do is that they are trying their best to rush into a trade. And guess what? Imagine that you have been selling here because you see that there is a very strong bearish momentum or some sort of like a bearish candlestick to the downwards, and you have been selling this. And what market did afterward was market just retest again, and boom, there is a double bottom, and market just go back to the initial trend. All right. I believe that many people are caught in this. All right. Who else has been caught in this? Type in a caught for me. So I know that you have been caught in this before. All right. All right. So just now I was mentioning about the market trend, and let us continue to the next thing. So we back to this chart. All right. So from this chart, what trend can we see? From this chart, what trend can we see? Uptrend, downtrend, or sideways? All right. Yes, uptrend obviously, because this is already happened. So we can see that this is obviously an uptrend. So one more trick for you guys. If you do not know how to see a trend in a very clear direction, you can just always switch to line chart. All right. You can just switch to line chart. So when you switch to line chart, you can see that the trend is very obvious. Okay. So the next thing, whenever we have identified the trend in the market, the next thing we have to do is that we need to mark two levels. All right. The high and the lows. So for me, I'm going to do like this. you can just practice this, all right? Practice this over and over again. So when you have marked this level, you can clearly see that, all right, so let's say you open this trade in the morning or in the afternoon, so you want to look for trades. So whenever you mark things like this, are you still going to be obstructed by a sell signal? Are you still going to get confused if market shows you a sell signal like this? All right. So yes, because there are a lot of people trying to sell after this bearish candle. And what market did was market just do another pullback after, I forget about this level. This is also another higher low level. And if we pull to the right, we can see that market retested this level and continue back to the uptrend. So what we need market to show us if we are going to look for a short trade. All right, we have to wait for market to actually break this level and market pull back again, and market need to break this level. So if market shows you this pattern or this scenario, this is the time you can start to look for a short trade, because we have a price reversal confirmation here by market creating a new low, and the new low is broken by a new low and is broken by a new lower price level. All right, so let us back to the presentation. So the next step is that we got to learn how to identify our key levels and SNR. So if you have noticed recent market trend, you might be seeing that most of the support and resistance just did not work so well compared to the last time. Meaning to say that market is less respecting to the support and resistance. All right. So for me, now I'm more focusing on key levels instead of SNR. So what are the key levels for me? All right. So let us back to here. Let me delete this. All right. So whenever market shows me a very clear trending pattern or a very clear trend formation like this, so I know that this is an uptrend, you can always add an arrow on your chart so you know that I should be going to look for a buy trade instead of a short trade. So when this happens, I'm going to mark two levels. All right, I'm going to mark two levels. This level and also this level. So this is going to be my neckline entry. All right, if market pull back to here, I can go for a buy trade if there is a buy signal. All right, else if market pull back deeper to here, but this previous higher low is not broken, I'm still going to look for a buy trade. No matter how, I'm still going to look for a buy trade. So these are the key levels that we can look for. All right, another key level is at the top. All right, another key level is at the top. So if let's say we did not manage to wait for a very good entry within this level or within this zone, what we can do is that we wait for market to show us one more confirmation, which is the break of this previous high. And when market pull back, we can again look for the entry signal as a trend trader. All right, do not always buy at here when market has not break out. All right, when market has going to retest this level, I believe that most of the trader, they are worrying that they might be missing out the trade. All right, so they are going to buy here. And what market did is market break down again and we have the trend changes. So do not worry or do not afraid that you might miss a trade. So it's very common to miss a trade because that we cannot control the market. But the most important thing here is that how good are we in sticking on our initial trading plan? All right. So the key levels are basically the higher low or the lower high of any trending market. And the third thing is that we need to identify our entry pattern. Okay, so for me, my entry pattern are basically very simple. All right, let me just type in here. All right, so for entry pattern, personally, I prefer chart pattern instead of candlestick confirmation. So the first chart pattern that I always like to use is that double top or double bottom. Or second thing is that triple top or bottom. And we have candlestick confirmation like one more head and shoulder. And one more thing is that the candlestick confirmation here I am meaning is engulfing or pin bar. All right, so how do we trade double bottom? All right, many people are thinking that double top or double bottom need to be at the lowest point of the market. And let's say what they see is that let's say this is a key level here. This is the resistance level. Okay, right, resistance level. All right, so based on your trading experience, can we sell here? Can we sell here? Who say can, type in sell for me. Who say cannot, type cannot. Can we sell here? Sell, no, sell, no. All right. All right, the answer for me is a no. All right, price might go down. All right, I wouldn't know. Price might go down. I wouldn't know. But for me, in order for me to rush into a sell trade, I need market to do one thing, which is I need market to confirm that the trend has changed from an uptrend to a sell trend. Yes, confirmation. So what confirmation that I am looking for? I'm looking for market to actually break below, pull back again, and break below. All right, I'm waiting for confirmation like this. So if you can check back to the market history and you can see that there are a lot of fake pattern or the fake chart patterns, fake double top happen like this. And what market did was market just went up. Market just went up after all the sellers got trapped. So if we look again at this picture after we see that, oh, market was from an uptrend, market testing the resistance level, and market did not manage to get lower, and market just break up and created a new high, then I can see that, oh, this is a double bottom pattern. How can I miss the double bottom pattern? Right. So basically, I have been experienced this before. So for me, the best way to trade with chart pattern is that we use chart pattern as a trend continuation signal instead of a trend reversal signal. All right, I repeat again. The best way to trade chart pattern is we use the chart pattern as a trend continuation signals instead of a trend reversal signal. All right, so this is an uptrend. So we can see that the resistance level has now become the new support level. So the resistance level has now become the new support level. So what happened in a sell trend? All right. So we have this level or zone again. All right, so imagine that the price is dropping, blah, 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 and price reach this support level. And most of the people will say that, oh, market has shown me a double bottom. It's a very good time for me to go for a buy now, else I will be too late to enter this pair or be too late to enter the market with the very good price or a very low price. And market just drop afterwards. And this has become a, this is double top. I used another color. All right, and market become a double top and double bottom. So for me, the best way to trade chart pattern is always we try our best to wait for the chart pattern in a very clear trending market. And the second thing is that we have to ensure that the chart pattern is aligned with our initial market trend. All right, so I'm going to copy this. You can always have some notes on your trading desk or on your monitor or on your trading desk, anywhere that you can see easily, so that you will not get affected by emotion. All right. So this the same scenario or the same criteria, the same requirement happens for the triple top as well, head and shoulder pattern as well. And for the candlestick confirmation, personally, I would prefer engulfing or the pin bar. All right. So after identify the entry pattern, what we need to do is that we need to identify our entry. All right. So I need to draw this again. So when market show us a very clear trending condition or a very clear trend, what we do is that we can use our Fibonacci, all right, Fibonacci, to pull from the higher low, to pull from the higher low to this higher high. All right, so if you notice that I'm using this 1, 2, 3, 4 level and 1, 2, 3, 4 level in between. So the ideal entry is between the 50 and 61.8. So this is the very ideal entry. So when do we go for aggressive entry? So we can go for aggressive entry if market retested the 100% of the Fibonacci. So basically what I do is that I'm going to pull the Fibonacci and I'm going to wait for market to pull back here. But sometimes we can see that if, okay, this 38.2 level is a magic level in Forex trading. So I'm going to choose this for red color. So I'm going to, this 38.2, because some in a very strong trending market did not really pull back to 50% or pull back to the 100% or 78% of the entire Fibo. Market is going to get rejected at 38.2 level, and what market did was market just shoot up very fast after being rejected at this 38.2 level. So there are two options for you. You can either go for a trade here, but personally, I will not do that because I need to stick to my risk and money management plan. So basically what I do is that I'm going to wait for market to break this higher high, and we have a new higher low form, and we can again draw our Fibonacci at here to look for the entry. So let us go to the chart. All right, let us go to the chart. So I'm going to copy this. All right, I'm going to copy this and pull to my chart. Okay. Okay, how can I copy this? All right. Never mind, it's okay. All right, so if we go to our chart here, if we pull our Fibonacci from the low to the high, can you see that market got rejected here, 38.2 and 50, and you can enter the market based on the candlestick. And on this example, we are only talking about one time frame, and later on I'm going to show you how can you combine different time frame using the same technique. All right, so you can double check here. Market got rejected at 50%. You can use a pending order here, right? But for me, I will prefer to go to a lower time frame to look for more confirmation. 50% as well. 50% as well. All right, 78.6%. So these are the area or the zone that you can go for a very aggressive entry. All right, so let's say at this time being, we have market show us an uptrend, one confirmation, market created a new high, pull back to 78.6%, and at here we can see a setup which is bullish dominant setup. So we have two confirmation for us to enter the market. So you can place an entry when market tested 50% of this retracement. Maybe let's say you are going to go for one lot, you can just place 0.3 here, 0.3 here, and 0.4 at the 78.6. You can just place your entry according to the Fibonacci retracement, so that you know that how can you scale in for the trade and always maximize the profit instead of just sticking to one entry per trade. So let's say you do not know about, you do not want to draw Fibonacci retracement, this and so. What you can do is that you can always refer to the key level previously. So the key level previously is actually at here, the higher low of this uptrend. So this is also a drop-based rally setup. If you are trading according to the supply and demand theory, this is also a drop-based rally setup. So you can highlight the entire base. You can highlight the entire base, and within the base, these are the area where you can look for an entry, and your stop loss is just right below the base. So this is how you can combine into different ideas into your daily trading. Because the problem that I see in most of the people is that whenever they see a very good setup, or they see something like confirmation entry signal, they will just rush into the trade without thinking further. All right. The most common example here is that many people is going to say that, let's say in our Telegram group, many people is asking that, can I enter the market based on this dominant setup, or can I enter the market based on that setup? So yeah, I just found an example here. All right. So let's say if you enter the sell trade based on this dominant setup, so guess what? Market is going to be in an uptrend again. All right, because in overall market is still in an uptrend, and at this time being, we did not see any confirmation for a sell trend. All right. All right, we did not see any confirmation on a sell trend. So in fact, market is just doing a very deep pullback, and boom, market just back to the initial trend. All right, so now we move to multiple time frame. All right. So we back to our procedure. So the first thing what we do, the first thing we identify the trend. And the second thing is that we identify our key levels. All right. So after we identify our key levels, we can draw our Fibonacci retracement after we know the trend and also the key level. For example, like this. All right. So for example, like this. So we can just highlight or draw the Fibonacci, and we can just highlight the zones that we are going to look for trade here. And what we do next is that we just delete the Fibonacci. We don't want our chart to be very messy. And the next thing we can do here is that we go to a lower time frame to look for these 4 things: the entry patterns, the double top, double bottom, triple top, head and shoulder, or candlestick confirmation. So if you are an intraday trader, I would suggest you to combine this chart. All right, for intraday, you can use H1, H4, H1, and M15. If you are a swing trader, you can use weekly, daily, and H4. All right, so I'm using more on I'm being more intraday instead of a swing trader. All right, because I'm a full-time trader, so I will be looking at the chart on a daily basis. So what happened this was there are a lot of arguments between the chart or between the intraday chart and the swing chart, because on the swing basis, if you open up a daily chart, you might be seeing that, okay, all right, on daily chart, we see that market is doing a downtrend and we should be focusing on the sell signal or the short signal. But an intraday trader, they might be seeing an uptrend on H1 or H4, and that uptrend on H1 or H4 is actually the pullback on daily chart. So first thing first, you need to identify which time frame that you are going to use for identifying the market trend. All right, you cannot be using daily chart to get the trend and you spot your signal on M15. You are going to get caught or you're going to get trapped for many times. And you, as an intraday trader, you cannot use daily chart as your entry signal because your stop loss will be so huge. And if your account capital is not enough to enable the account to have some negative floating, you will be in a big trouble too. All right, so now let me show you how can we combine these into real life market trading. All right, so for example here, what is the trend now? What is the trend now? Uptrend, right? So are you going to look for buy or are you going to look for sell? Buy. Yes, correct. So where are the key levels? So now the first thing, we know that we have identified the market trend. So the second thing is that what we need to do, we need to identify our key levels. All right. So where are our most recent market key levels? So we can draw here. And we can also draw here, all right, somewhere around here. So so at this time being, we should be looking for a buy signal. So right. So let us go to M15 and see whether can we find any buy signals or not. So when I say buy signals, I'm actually saying, hey, where's my notes? Yeah. Yeah, I'm actually saying this. All right. So let me drag to the chart. Okay, so far away. Yeah. All right. So when I say entry patterns or buy signals, we are actually looking at these 4 things. So we wait at M15 for these 4 things to happen. So Obviously, we do not have any reason for any signal for us to look for a buy trade because there is no either one happens here. So we're back to H1. And we can see that market is about to break this key level, but there is still no confirmation yet. So at this time being, we are just going to wait patiently for market to show us a clearer direction. So we wait for market to continue. All right. Looks like. All right, there is a bullish engulfing candlestick here. We might have missed out here. Okay, and go back to H1 again. Right, so if you have oops, I need to refresh this again. Where are we just now? All right. All right. So I was mentioning about this level and this level. These are the level that we should take note or we should mark as our important key levels. And if we let the market to continue to play out, and just now there is an entry signal here. This is a bullish engulfing candlestick. And normally I would take the trade if we have more than 1 to 2 risk reward ratio. All right, you can get 1 to 1 is good enough for you. So the market is likely to be in a sideways condition instead of a trending condition because unless there is a clear break above this level. All right, so what we can see here is that market has actually broken down. Market has actually broken down of this. And what is this structure? What is this structure? This is a downtrend structure. All right, this is a downtrend structure. So the next step we're going to do is that we have to shift our key levels. All right, we need to shift our key levels. So these two are the important key levels that we can look for a potential sell trade. So the next thing we have to do is that we need to use our Fibonacci retracement tool to pull the Fibo. And we know that at this area, we can look for entry. So let us change to red color. All right. Green color is better. All right. Red is SL in trading. Okay. We just let, if the market continue to drop, we just adjust our Fibonacci level. All right. So we can see there are some rejection at here. All right. So when this happens, we just leave our level here and we go to M15 or a smaller time frame to look for signal. So you have to be in mind. You have to be in mind that M15 might be in an uptrend, so we need M15 to show us the entry pattern, that the 4 patterns that I have just mentioned just now. All right. Okay. Market has entered the zone, the Fibonacci zone. All right. Trying to break. I believe that this is already, let's see. It's going to be near 78.8, 78. Boom. So if you use one time frame to trade, you can pending at this level. So in case that you have missed out this level, it's okay to miss out the trade. All right, no worry, it's okay to miss out the trade. We just look for the next trading opportunity, right? So market has breakdown again, and on H1 we can clearly see that market has again created a new low. So we can again draw our Fibonacci. All right, we can again draw our Fibonacci. And we're back to our entry time frame, which is M15. All right. All right. So this is one more entry signal got rejected at this 38.2 level. We can try to go for a short trade because these actually fulfill our criteria. All right. So we can go for a short trade based on this candlestick alone. We just see whether can we get 1 to 2 take profit or not. All right. Yep. We got this. So let us do one more recap of this entire trade. Okay. Initially, market shows us an uptrend, right? Because we can clearly see that on this left-hand side of the market is actually an uptrend. So during an uptrend, market did what? Market did break the key level here. This is one of the important key level here. Market has broken this key level and market broken the low. Market created a low and break the low. So this become a downtrend criteria, a downtrend pattern. So if we go to the line chart, we can see that this has become a downtrend. So what market, so when we have this downtrend structure up, we need to always shift our key level. So what market have to do if market is going to be back to the uptrend, market will need to break this key level and pull back and break this previous structure high. So this is the trend continuation for uptrend. All right. So what market did was market got rejected here. All right, at this key level, rejected here. So unless you use a pending entry at all the key levels, else you will be missing out this trade. But for me, I would not use a pending order at here because there are few concerns. Because at the first concern is that overall market is in a very strong uptrend. All right, unless market is in a downtrend and I can use the pending order at all the key levels. All right, I'll feel more comfortable. So if previously market was in a very strong uptrend, so what we did is that we wait for more confirmation. So market forms a double top and drop afterwards, and this candlestick alone has also broken the previous low of this entire structure. So at here we can draw again, or we can shift again our key levels. All right, so this has become the new key level, and guess what market did is market break down again at here. So we will need to shift again our key levels, and we can draw our Fibonacci accordingly. After we have drawn our Fibonacci, we just go to our entry time frame to look for entry signal. So the entry signal that I used just now is a bearish engulfing candlestick. So in case you want to wait for more confirmation, you can wait for a double top at here. All right, you can wait for a double top at here, or you can wait for a head and shoulder pattern at here. All right, so let us find one more example. All right, we go to the pound dollar. All right, so the example I use is combining H1 and M15. You can combine H4 with H1 or even daily with H1, but I prefer to take more intraday trades instead of a swing trade. All right. All right. So let us have a look here. So this is an uptrend. Previously is in an uptrend. All right. Market broken down the uptrend, but this is not the time for us to go for a sell trade yet. We need to wait market to break this low created in order for market to confirm to us that this is actually a sell trend. So when market has actually break this, what we can do, the first thing we have to do is that we need to draw out our key levels, right? Our key levels. Always repeat the same procedure again and again until you are very familiar to this. So I know that these are the area where we can look for a short trade. Next, we have to do what? We have to draw, we have to use our Fibonacci, right? So our 50% retracement area is actually confluence with our previous key level. And if we look to the left, which is also the previous resistance level here. But it's okay to not look to the left. We just focus on the recent market structure. So we go to our entry time frame. For now, it's M15. So on our entry time frame, we have to know that we only look for a sell signal because on our H1, market is in a sell structure. So on M15, we only look for a sell signal. All right, so let us see whether market pull back or not. So on H1, we have to adjust our Fibonacci. Right? There's no signal here. All right. We just wait patiently for the signal to happen because in M15, this is actually an uptrend structure. So we want the M15 to be in a downtrend structure as well so that we have more confirmation or more confluences. All right. So, right, this is something like a three soldier candlestick pattern. So we just, oh, market did not pull back. So let's see whether can we look for another sell signal or not. We have to shift our Fibonacci again, shift our Fibonacci again. All right. M15, look for signals. Okay. Okay, M15, what I see here is that there are something like a trend line being broken. So let's say we enter the market after this low has been broken, all right? Because we need M15 to be in a downtrend as well. Okay, so let us jump into the market. Stop loss above, and we just get 1 to 2 take profit level. Oh, sadly, our stop loss got triggered. Never mind. We go to H1 again to look for trade. And always remember to shift your key levels from time to time. So market is retesting this key level where we can look for a more aggressive entry. Go to our M15 again. All right, this is something like a dominant setup. Not really. All right, one more candle. Okay. So let's say we enter based on this candle. My stop loss is about how many pips? 27.9 pips. So I need 60 pips in order to reach 1 to 2. And after we have this set, we just let market to play out. Not looking well. All right, let us go for the quicker version. All right, we got stop out again. So let us do another recap on why we got stop out. Okay. So meaning that this key level is no longer valid. And what market did is that market respect to this key level, and market has actually created a new high level to here. So this might be a temporary uptrend for us. So by practicing this again and again, you can notice that our stop loss is actually very, very tight, and our reward, we can get at least 1 to 2 or 1 to 3 reward from time to time. All right, so let us play this out. Yeah. So if we scale down to M15, we see, is there any entry that we can, any entry pattern that we can use in M15? Yep, there is a double bottom here. So the idea here is very simple. Okay, the first thing is that we need to always admit that we have been losing on this trade, because initially what I did was, after seeing this, we locked our position in a sell position, but market did not respect to this key level, because in order for this sell trade to continue, market need to respect this key level and continue to go down. All right. And if you look in a bigger picture, this key level is violated. This key level is no longer valid for a sell structure, and this is a very typical resistance become support basis. So at this time, we should be looking for a buy trade, and we can pull our Fibonacci from the higher low to the higher high, and we scale down to M15. We can entry based on double bottom or any other engulfing candlestick or any other entry setups. All right. So far, any questions so far? Any parts that you find confusing? Let me have a look on Facebook comments, because this live stream is also being streamed on Facebook, right? Facebook comments. All right. All right, where is a good entry area? All right, so where is the good entry area? All right, okay. On the second one, yeah, meaning that this example. So where is the good entry area? So if we do not want to see this, by looking at this, we know that this is a key level, and this is something like a triple top, or how to say, retested for 1, 2, 3, 4, 5, 6 for many times. So this is actually a very good entry signal, which is also one of my trading checklists. In my trading checklist, this is one of the most powerful entry pattern. But we have to know that market, we couldn't control the market, so we just stick to our trading plan. So if the market tells you that the trend is going to change, we just change our mind and look for the other trade direction. All right. Okay, which time frame is the best for intraday trader? So I need to ask yourself, I need to ask you two questions, Abia, Izinzo. So the first question is that, how long are you willing to spend a day on a chart? All right, how long are you willing to spend on the chart within a day? All right, if you tell me you can only spend 1 to 2 hours on the chart, then I would suggest you to not go for intraday. You can go for intraday and swing, a mixture of swing and intraday, because you'll be more relying on a H4 chart. All right, because a H4, there are 6 hours every day on a H4 chart. So you need to know that how long can you spend on a day. All right, so Friendly is asking, do you always set 1 to 2 risk and reward after rules meet to a favor, or should we set rules based on SNR? All right, personally, I would prefer 1 to 2. All right, I would prefer 1 to 2, but I'm going to see SNR as well. All right, so let me show you one more example. All right, so let us go back to this euro dollar chart. Okay, let's say we are on this euro dollar chart. All right, this is an M15 time frame. So we go back to go back to H1. Okay, so let's say at here, we just continue from our example just now. All right, so let's say at here, we know that our key levels, market has broken down here, and we have our key level at here and also at here. All right, so these are the area where we go for aggressive entry. So if let's say we enter the market, let me switch to M50. All right, okay. Okay, let's say we enter the market right after this head and shoulder pattern. Okay, head and shoulder pattern. So for 1 to 2, where do we need? We need market to reach. We need market to reach somewhere around here. All right, so this is our 1 to 2. So basically 1 to 2 is just a plan for me, but when market shows me reversal signal, all right, when market shows me reversal signal like this, I have a trend line being broken. So, or if we go on H1, or even we go on H4, all right, so if we go on H4, we know that this is our important SNR on H4. So instead of 1 to 1, I'm going to choose to exit the trade earlier, or I'm going to set break even to this entire sell trade. All right. So in trading, we always need to be flexible. All right. Yes, we set a target 1 to 2 or 1 to 3 or even 1 to 6. But when at the moment that you decide to exit from the trade, you need to ask yourself at least 3 questions. So the first thing is that, why am I not trading according to my plan? So right. So the second question is that, is market showing me signals, or is market showing me any signs of trend reversal? And the third question is that, did I miss out any important key level or important SNR? So by doing this, you can get at least 1 to 1 on most of your trade, and you can get a positive stop loss, or you will hit break even, worst come to worst. All right. So the idea here I want to bring up is that it doesn't matter with how much money can you make in a trade. It's how much money are you going to lose in a trade. So if you are making 100 to 200 bucks or even more in the trade, but you are losing the same amount in your other trade also, there's no point for you to spend your time and trade. You are just wasting your time. But if you are losing 10 bucks, 20 bucks on every trade, but your return is always 50 bucks, 100 bucks, or even more, this is the reason why are we trading. All right, I hope this is clear. All right, so Albion is saying that it is better for using SNR if the structure or your trade is broken. Yes, correct. You can close partial profit and let your remaining trade to run. All right, this is depends on how do you structure out your trades. And let me back to the Facebook. Let me see any more comments or any more question from the Facebook. All right. All right. So that is no. Yeah. Yeah, after you decide to exit the trade, do you still use the previous key level to look for buy setup? Yes, because okay, you have to know that the key level, I draw the key level is based on my directional time frame. So at this time being, okay, let's say, let me just delete all this. Okay. So let's say at here, all right. So by looking at this chart, I can know that this is a sell trend because this level has been broken. So there are two levels that I need to take note. All right, the first level is here, and the second level is here. So these two are my key levels. All right. If let's say I have entered a trade here and got stop out, and I enter a trade here and got stop loss, because I'm entry using a smaller time frame, all right, but my direction is on a bigger time frame. Unless you entry on the small time frame, but your stop loss is based on your higher time frame, which is I do not recommend. All right, I do not recommend this. Oh, this is N15. Sorry. Okay. Yeah, I back to here. Okay. Okay. So let's say we are at somewhere around here. All right. We pull our FIBO. We know that these are the area where we can look for an entry. And if we go to M15, is there any signal that we can look for entry? Okay. Apparently there is no, but assuming that there is an entry signal at here, if let's say market just break down of this trend line and you decided to go for a sell entry, something like this. And what market did was market go the other way around. But you have to remember that market is still respecting your directional time frame key level. Market is still respecting your H1 key level. And as long as this key level is not broken, you should only look for a sell trade. All right. Unless this key level is broken and market pull back and created a new high again, this is where you need to change your mind to a buy trade instead of a sell trade, just like the example we did on pound dollar just now. All right. So let me back to my slide. So Q&A, I believe that we have done. And so I'm having to, because, okay, the session today has ended. So I will be going to share with you guys some good news. All right, we are actually having a FX Action Trader Premium Telegram channel. And what we do in the channel is that we will be sharing some trade calls and also some analysis in the channel. And you can join our channel in two ways. So how to join the channel is very simple. You can just go to this link, and the fee is just a cup of coffee or 2 cups of coffee. Is USD 9.9 monthly, and you can cancel your subscription anytime. This is the first option. All right. So the second option, you can register a trading account with us, and you can get lifetime access with a minimum deposit of $100. So I'll be sharing this link to Facebook and also the Telegram group later on for you guys. Okay, so that's all for the Zoom meeting today. This video will be recorded and I'm going to upload this to my YouTube channel. So in fact, you want to have some recap or watch again this video, just wait at our YouTube channel. So please remember to subscribe us on our YouTube channel. And I'll be going live again on next week. Just wait for the announcement on our Telegram group. All right. So thank you guys for the time tonight. I will see you guys again. Have a good day. Have a good day, everyone. Bye.